Good afternoon, ladies and gentlemen, from Arcadian Court in downtown Toronto. Welcome to the Empire Club of Canada. For those of you just joining us through either our webcast or podcast, welcome to the meeting. The Empire Club of Canada was fortunate to host Don and Alex Tapscott for a relaunch of the updated edition of their Blockchain Revolution book. It was the last event of the 2017-18 season. Many people said to me that it was one of the best events of the season. Most people are loosely aware of Bitcoin as a cryptocurrency, and they understand the security advantages of blockchain. But for those of you who want a deeper dive, today at all of your tables, you have a book that will be available for signing after the event by both Don and Alex Tapscott. Don Tapscott is also in the audience here today. So, and that is courtesy of Cobalt Blockchain, and thank you very much for being our book sponsor today. Thank you. The Tapscott's book is the penultimate theory book. It defines and explains and categorizes almost like an encyclopedia of blockchain, only more. The fundamental blockchain principle allows the book to, in the book, talks about the trust protocol, allowing currency or value to be safely sent over the internet. In our everyday email, that is not what happens. We can have multiple copies of the same email, but the internet of value can't function that way. It can only works when there's one copy of that value. And wouldn't Hillary Clinton like to have only one copy of her emails out there? Because obviously we all know it was found on Anthony Weiner's computer, which caused a lot of trouble. The trust protocol assures there is only one version of the value and no trace after that. So there's a lot of value in reading this book. Once you get ahead of how once you get your head around how crypto assets are really not that much different than a common stock, you realize the sky is the limit for blockchain. With both, there's no commodity delivered. All stocks are just contracts that rely on users to give it value. The same as crypto assets. It's humans who actually ascribe the value, and I know the value of some of the currencies, bit currencies have gone down, but we are effectively standing in this room today because more people are ascribing value to blockchain. And everyone wonders where this technology is headed. So, and Donald Tapscott knows where it's headed. He said at the Empire Club last year, this is not about currencies. It is a new operating system for our economy that will profoundly change every institution in the economy. So, and today we are headed into a panel discussion led by Alex Tapscott, a globally recognized writer, speaker, investor, and advisor focused on the impact of emerging technologies such as blockchain and cryptocurrencies on business, society, and government. In 2017, Alex co-founded with Don Tapscott the Blockchain Research Institute, a multi-million-dollar think tank that is investigating blockchain strategies, opportunities, and use cases. To moderate and introduce today's panel, please welcome to the stage Alex Tapscott. Thank you.
Well, thanks, Ken. That's probably the first time in Empire Club history that Anthony Weiner's private emails came up as a topic of conversation. I'm not sure how the Queen would feel about that. So I'm delighted to be here with you all today. This is a very exciting time in human history, and that's because the world is entering a second digital age. You know, you see it, you feel it everywhere. We've got new technologies like artificial intelligence and machine learning, virtual reality, technologies in our bodies, robotics. All of these things are beginning to accelerate the pace of change in business and in society. But there's actually one technology in particular that is going to have a bigger impact than any other. And it's actually going to help to animate all of these new technologies. And it's the technology behind cryptocurrencies like Bitcoin, and it's called the blockchain. So I gather, by accepting this invitation, you've all heard of this thing, blockchain, yes? And who understands it really well? Raise your hand. Matt, you should probably raise your hand. So that's interesting. So it's my hope that at the end of this, you'll reflect back on these brief remarks and on the panel in the same way that you might reflect back on a conversation you had, or an article you read, or an experience that you had in the 1990s with the internet. Because blockchain really does represent the second era of the internet. So I'll explain what I mean by that. When you use the internet today to send and move and share information, as Ken said, you're not actually sending an original, unique thing. You're sending a copy or a version of it, and you're retaining an original. Now, for most kinds of information, like email, that's OK. It means you can send the same email to one person, you can send the same one to someone else. It's OK for Twitter. You can tweet, anybody can see it. It's great for things like Wikipedia. If you put an entry into Wikipedia, it's available for all to see. So the internet is in many ways like a printing press for information. And overall, it's had a very positive impact on the economy. Well, when it comes to things that have value, assets, money, being able to send a copy is actually not such a good idea. So Matt, if I owe you $20 for drinks the other night, which I think I actually do, it's important that when I send Matt that money, that he has the only version. And I can't send a similar version, the same version, to someone else. Because if I can copy money the way I can copy information, the money becomes worthless. It's not just true of money, of course. It would be true of any kind of asset, like a stock or a bond. If I sell a share of Apple to one person, I shouldn't be able to sell it to someone else. So this is a very specific problem that computer scientists have been trying to figure out for quite some time. And it's called the double spend problem. How do you ensure that when you move something of value online, that you aren't leaving behind a copy? That everyone can trust that that value has been moved permanently. And because it's such a difficult problem to solve, we still basically rely on intermediaries, middlemen, who sit in the center of transactions and perform a whole bunch of important steps. So there are intermediaries you'd be familiar with, of course, things like banks and governments, but increasingly, because of the rise of the internet, there's a whole new class of intermediaries, big digital conglomerates like Amazon and Google, large social media companies like Facebook, who basically sit in the center of transactions and perform these really important steps. They establish identity between parties. They establish trust between parties. They perform all the business logic, clearing, settling, contracting, record keeping that makes commerce work, online or offline. And overall, these intermediaries, they do a pretty good job, but they have a few limitations. They're centralized, which makes them vulnerable to hacking or to attack. Just ask the Democratic National Committee or Mr. Wiener. They add friction and they slow things down. So in the case of sending money overseas, it can take days or weeks to settle a transaction. I've been trying to buy something on a registry for 2 weeks for a buddy of mine who lives in California. And the banking systems are so disconnected that it's actually very difficult for me to do this in 2018. The third big issue is they exclude big parts of the population. There are about 2 billion people in the world who don't have access to financial services. And the last issue, and this is one that I think is most prescient today, is that they capture all this data. And that's deeply problematic, because it means we can't use that data to organize our affairs. It means we can't monetize it, and it can end up in the wrong hands. In fact, the default typically is that it does end up in the wrong hands. So what if the internet were entering a second era, from an internet of information to an internet of value? Well, in 2008, exactly 10 years ago, an anonymous person or group of persons created this thing called Bitcoin. So who's heard of Bitcoin? Yeah, it's that thing that drug dealers use to buy guns on the internet. No. It's the worst performing asset in your portfolio. No. Bitcoin was designed to do something relatively simple. It was designed to be cash for the internet, a way to move value between people without an intermediary. In the same way that if I were to go downstairs to the restaurant here and buy a donut and a coffee and hand the guy a $5 Canadian bill, I don't have to use the Visa network. He doesn't ask me for my driver's license. He doesn't want to know where I live. He doesn't need to know how old I am. He doesn't need to know my social insurance number. It's just money. It's a bearer instrument. When he has it, I don't. And when I have it, he doesn't. So a digital bearer instrument didn't really exist for the internet. And that's what the problem that Bitcoin sought to solve. And what was interesting about it is that it worked. And it's worked so well that it set off this spark that has kind of caught on like wildfire and helped to animate all sorts of innovation. Because it turns out that the blockchain, this technology, isn't just usable for currencies. It's usable for all kinds of assets. It is the first digital medium for value, a way for people to send and move and organize value online without the need for a trusted intermediary. Because on a blockchain, trust is established through a combination of mass collaboration amongst users, a little bit of connectivity, and some clever code. So it turns out that this is going to have a big impact on basically every single industry. We talk about financial services is certainly one of them. And it turns out every aspect of the industry is going to be transformed. At the Blockchain Research Institute, we're also examining what blockchain means for media, for telecommunications, for manufacturing, for governments, for basically every industry in the economy. But even more than that, blockchain represents a new operating system for the economy. It represents a new way to organize capability, because it turns out that the roles of leaders in the firm are going to change as well. And that's because the reason that we have companies in the first place, basically, is because it's cheaper, often, to do things inside the boundaries of a firm than in an open market. So you have to ask yourself, what does it mean for the economy if the cost of moving value, establishing trust, contracting, and organizing value drops in the same way that the internet dropped the cost of moving and storing information? All of a sudden, we wouldn't need to do things inside of a firm. We could do them in an open market. And so the companies of the future are going to look a lot less like the vertically integrated and horizontally integrated companies of the industrial age, and are going to look a lot more like the internet and the networks that blockchain is enabling. So Toronto is a center for blockchain innovation. During the World Cup, we had a fun little game we played where we basically said, ask the world who's the leading jurisdiction, and it turns out Toronto ranked 5th overall. And that's because we've got a lot of great things going for us. We have got a very good legal system. We've got an open policy for immigration, which allows us to attract talent. We have banks that are open to innovation. There are very few of them, so they can collaborate on core technologies, which allows us to move a little bit faster. We've got regulators that are open to innovation. But most importantly is we have a community of developers and entrepreneurs that are helping to fuel the fire of the blockchain revolution. And in many respects, blockchain is a made-in-Canada story. A lot of the original Bitcoin developers were Canadian. Ethereum, which is the second largest blockchain platform and is used by dozens of small companies and many large ones as well, was founded by a group of Canadians. We've got platforms like Aeon, Matt spoke, you'll hear from shortly, Cosmos, and others, which are based here in Toronto. So there's a lot of amazing innovation happening here. At the same time, there are lots of challenges to making the blockchain revolution a reality. Everything from the technology itself. Is it scalable to meet the demands that we want to place on it? Could we run markets that we know today, like stock markets, on these kinds of platforms? Today, probably not. What does it mean to govern these technologies? These aren't traditional institutions that we know. They're not governments or businesses. They're networks. So how do you create rules and standards and policies that allow these things to scale responsibly? How will incumbents react? Big companies who are typically in the middle might find themselves disintermediated, and how will they react? Will governments create policies that enable innovation, but also protect investors and protect the integrity of markets? These are all challenges that are left unresolved. And the good news is we've got a terrific panel who is going to help us cut through the clutter and help understand these issues. And of all those different groups that I talked about, they're really well represented by an excellent group of stakeholders. So without further ado, I'm going to introduce our panelists. Our first panelist is Anna Badour. Anna Badour co-leads McCarthy and Tétrault's Fintech group. She's a partner in their financial services group, a certified anti-money laundering specialist, and a certified Bitcoin professional. I am not a certified Bitcoin professional, so maybe you should listen to her and not me. One of the things that's really interesting about McCarthy's is that they actually, in addition to advising a lot of companies in this space, they're actually a model user of the technology. They did a pilot project with a company called Open Law, which basically did what's called a smart contracting platform on Ethereum. We'll talk about what that means, but basically it's the idea of taking all the traditional contracting language you see in a legal agreement and automating it with guaranteed execution on a blockchain. So that's something that's going to have a profound impact on lots of aspects of the legal industry, and Anna's the person to tell you all about it. So Anna, come up on stage, please. Our second panelist is Fatima Peron. Fatima joined CIBC in 2003. She is currently the Senior Director of Enterprise Innovation. In this role, Fatima provides leadership in 3 key areas of driving innovation: through awareness and education, through quick tests and learning from ideas, and through championing complex innovation initiatives. And CIBC is also a member of the Blockchain Research Institute. And Fatima's been a wonderful collaborator and partner and has helped provide great insights to that effort as well. So Fatima, please join us on stage. Could probably put this away for Matt. I've known Matt for a while. Matt is the founder of Aeon, a world-leading blockchain protocol designed to solve the most prevalent challenges limiting blockchain's mainstream adoption, things like scalability, interoperability, enterprise use, et cetera. Matt got his start in the blockchain space at Deloitte. They were hosting an internal competition to see who in the company was working on some world-beating ideas. And he and a group of people developed a proposal called Rubix, which eventually became Deloitte's blockchain practice globally. And Matt, got a little too big for Deloitte and decided to start his own firm. He's a great entrepreneur. His team is something like 70 or 80 people here in Toronto and a few other places around the world. He's a model entrepreneur and someone that Toronto and Canada should be very proud of. So Matt, come up on stage. All right. So I know that the Empire Club draws a lot of interest from Bay Street, and I know that Bay Streeters are very concerned with highfalutin ideas about innovation, et cetera. But what they really care about is making money. And one of the things that's sort of hard to avoid in this current climate is the fact that the crypto asset market, as we know it today, has declined a lot in value. And the question really is, first of all, are crypto assets blockchain? Is that what we talk about when we're talking about blockchain? And does the decline in this market have any impact on innovation? Does it affect the capacity to fund new projects, to attract talent, and to actually accelerate these ideas? So Matt, why don't you take a crack at that one?
Yeah, I mean, it's for those of you who follow the industry, it's been a rough couple of weeks. I think there's definitely a delineation between the categories of investors that we've seen come into the industry. More recently, a lot more institutional investors. In the last 6 months or so, it's been a lot of kind of the traditional finance crowd who are definitely looking at this as kind of an alternative asset class. We've seen a lot of activity around the Toronto Stock Exchange Ventures market here in Toronto and other places around the world. Similarly, those types of investors are definitely pausing right now, I'd say. Last conversations we've had with firms like GMP or Canaccord Genuity, you've seen a very, very significant decline in funding of blockchain projects that are going down the public markets routes. The other class of investors that I think are a little bit more kind of affiliated to kind of the long-term view of where this technology is heading, this whole kind of global transformation story, tend to be more from the venture capital world, tend to be more focused on kind of the underlying designs and concepts of the technology, and generally are investing on the basis of what's this going to look like 5 years, 7 years, 10 years from now. And in that domain, I don't think we've seen a lack of continued interest. In fact, I think moments like this in the market have kind of renewed some interest because now you're seeing people come into projects when prices are, we call them discounted, other people call them crashed, but yeah, so good opportunity for investors that have a long-term view of where the market's going.
Well, it's Black Friday, so let's take this game about that.
Yeah, one time only, yeah.
So Fatima, on the topic then, crypto versus blockchain, this is something that has taken many forms over the past few years. It used to be Bitcoin bad, blockchain good, but like what does it mean for enterprise? Are you looking at platforms that are open, distributed, that have done token sales as the basis for innovation, or are you looking at building your own platforms? Are you partnering with other participants in the market? What is first of all, just sort of addressing that crypto versus blockchain, but then more generally talk about CIBC's overall strategy when it comes to this.
So between crypto versus blockchain, I think from CIBC, and I think similar kind of sentiment across our partners and other FIs, is that we understand the value of blockchain. We're still trying to figure out where we can play in the ecosystem of crypto. So we're still a little bit risk averse when it comes to crypto, although BMO has been banking a bunch of crypto companies, which forces us to look at and think about, is there an opportunity for us to do that as well? When it comes to blockchain, I think there's tremendous amount of opportunity for CIBC and other banks in general. You spoke about, the slowness of transfer of value in the current system. So centralized payment systems, they work really well, but they're really, really old. Kind of functions the same way banking used to function in the 16th century. So there's a lot of room for improvement, and we've realized that. So there is a lot of investment into coming into there, and there's a lot of partnerships. We have to partner. Building it ourselves will probably, we will shortchange ourselves. We won't be able to keep up with the market. So a partnership is the way to go, and we are doing a bunch of projects on trying to materialize some of those opportunities.
So there's I wouldn't say competitor, but another big player in your market is Fidelity, the second or third largest asset management company in the world. And they just announced the launch of a separate subsidiary business, excuse me, that is going to make it easier to own cryptocurrencies by providing things like custody service, trading capability, the ability maybe even to help originate new digital assets. I think from their perspective that they see that as a important and growing market, but I also think they're thinking about what does the underlying technology mean for the assets that they deal in today, things like stocks and bonds. Is that something that CIBC would consider doing, or perhaps even partnering with a company like Fidelity?
Absolutely. We are spending some time in actually determining some of those value chains that you're referring to. Canadians in general tend to trust their banks. And when it comes to some things that are emerging technology or net new, although a lot of investments have happened in that space, they tend to look at their banks to see, where can they actually help play a role. And I do think banks have a role to play in there, where we can not only simplify some of our existing processes, but actually bring the market along. So it is definitely an area that we're focused in.
Okay, so let's turn the conversation a bit towards the legal and regulatory side of things. So Anna, I want to talk also about the Open Law Project, because I think it's really important for service providers, vendors, law firms, et cetera, to act as model users of technology, and I think there's big implications for your industry. But this is also an industry that's attracted a lot of attention. There's a quote that says that 21st century innovation is a great answer to 20th century regulation. That is not really good advice when it comes to assets and money and stocks and other areas where we're talking about value industries. It might work for cab companies, and it might work for publishing. But when we're talking about the financial services industry and others, rules and regulations really matter, and they play an important part in helping to organize the economy. So with that, what has been your experience in advising blockchain companies and helping them to navigate that landscape? And what would you say is what is your opinion of what policymakers and regulators are doing today, and what could they be doing better, or what are they doing well?
So I would say kind of the key fact there is that regulators aren't monolithic. There's a whole slew of different regulators and policymakers, and I like that you've separated the two, because often people kind of combine them, but policymakers determine how we're going to regulate, whereas regulators essentially implement and enforce the regulation, and those are key distinctions. But there's a whole series, even in just financial services, when you start to add up both on the provincial and federal side, you essentially get to over 50 different regulators that would touch on something like a large financial institution. And so the view and the approach from one regulator to another may differ quite a bit. We've seen certainly a range, and some have been much more active than others. The Bank of Canada in particular, and when you talk about essentially trying out the technology and getting your hands dirty, which essentially is what we've done as well. They've done now with Project Jasper. And then the more active regulators as well have been on the securities side, in particular due to some activity in the market. They've had to give guidance, and especially in the U.S. particular enforcement action. But there are other regulators as well, and just because we're not hearing about them doesn't mean that they're not focused on it. Definitely in my dealing with regulators in this area, they read a lot, and if it's out there, they're probably reading it. And there's a delay to regulatory action. So just because we're not seeing something quite yet doesn't mean that it's not coming. There's still a bit of a wait and see kind of approach.
So in terms of other government bodies and regulators, I think in this industry we get preoccupied with what securities regulators are doing, because a lot of the activity in the past couple of years has been around ICOs and token creation events. So for those who aren't aware of this, a company can issue a digital asset from a global marketplace in increments small and large, and raise pretty significant amounts of money. So the amount of money raised in 2016 this way was about $165 million, which is interesting, but not much bigger than your average bought deal coming off the street. In 2017, that dollar value increased from 165 million to somewhere between $3 and $5 billion. And in 2018, it's been over $7 billion. So you're talking about somewhere between 12 and $15 billion in aggregate has been raised. And the question, of course, is whether or not these tokens represent a security, whether they represent some other kind of asset like a commodity, or whether they are neither and there's something new. And that seems to be where the focus is. But of course, there's lots of other industries that could be impacted by this inside of financial services, like say the insurance business, but also in other industries, data sharing, privacy, and information. So do you spend any time thinking about those kinds of issues that are not really related to financial services?
Well, so my focus is on the financial services regulatory side, not so much securities, but certainly privacy is an area that we see come up more and more on blockchain use cases, as well as when you're dealing with either payment or securities infrastructures. There's a whole series of legislation and principles around systemic risk and so on that we see triggered. But really, you're right, it does span every industry, and I end up working with people in every group within the firm, everything from oil and gas to mining, and every use case will trigger a different examination from a legal and regulatory side. So it's something that everybody essentially has to look at, because there's no one area of law that gets triggered. It's essentially all of them that will need to adapt, and in some cases are very much technology neutral, and so work with the technology, but needs to be examined.
Great. So on the topic of areas outside of financial services, open law, this thing that you did. I mentioned very briefly this concept of a smart contract, but why don't you just flesh that out a little bit and tell us how you see the legal profession perhaps changing as a result of this technology.
Sure. So smart contract's not a new concept. It's one that was put forward before Bitcoin came around by a man who's both a cryptographer and a legal scholar. And it's essentially the concept that you can have automatic enforcement of an action on a contract. So something very simple as an example would be a vending machine. You put the money in, you get what you've paid for. And so essentially it automatically happens. The great thing with bringing that together with Bitcoin, or more particularly with blockchain, is that you can store the smart contract on a blockchain and you know that it's not going to be modified. And as a result, you can trust that the terms that you've agreed to with the other party are going to be the same terms when enforcement happens as those that you agreed to at the time that you agreed to them. And so that's kind of conceptually what a smart contract on the blockchain does. As lawyers, that's kind of hard to picture, right? And so we're kind of struggling with that, where we do a lot of thinking around the legal issues on this, but you really have to see the technology in some cases. And Open Law is a platform created by consensus. And essentially, they created a scripting language to translate a traditional legal agreement into essentially a templated form of a scripted document that can interact with smart contracts on the back end. Smart contracts in the more technical side as opposed to the more legal side. And as a result, working together, we put together a very simple form of loan agreement that automatically has draws and repayments. And it's fairly simple in the same way that Bitcoin itself is fairly simple. But it really illustrates the technology, and for us, allowed us the visibility into how it worked. So essentially, it's a draw in, it's Ethereum based, so it's a draw in Ether and repayments in Ether, but we'll be building on it, making it more complex to add other functionalities.
So there's lots of kinds of agreements that eventually could maybe look more like software than look like traditional legal contracts, where you have a set of building blocks, everyone kind of agrees on those, and then the software self-executes the terms. I think about things like payroll. People get paid every 2 weeks, and the government spends billions of dollars on sort of payroll software. And the idea that we get paid every 2 weeks or every month is really just a function of the cost of batching all of that information and transactions and then distributing all of the money. But if we had smart contracts, we could make distributions in real time or on a daily basis and reduce the friction and cost, for example, right?
Yeah.
So I think that's really fascinating. I'm glad you're doing that. Matt, platforms like Aeon, Ethereum, and others are often called smart contracting platforms.
Yeah.
And that's because Bitcoin is a single-purpose technology. It allows you to move an asset called Bitcoin, allows you to store an asset called Bitcoin on this network, but it doesn't allow you to do anything else, really. So a whole bunch of innovation has occurred over the past few years to create platforms that have more robust functionality. And the analogy that people use is sort of the difference between a typewriter and a PC. One thing does one thing, it does word processing, whereas a PC can run many different applications in different industries. So that's kind of what you're doing. So at the same time, a lot of the discussion here is around decentralization versus centralization, right? Fatima pointed out that these centralized systems can be slow and costly and cumbersome. Why is decentralization better?
Yeah, I mean, to your first comment, I think what often gets missed in the conversation of cryptocurrency is that we're talking about something significantly more than just mechanisms of exchanging value. Like you said, these smart contract systems often get referred in the context of contracts from a legal perspective, so people start to think about them in a particular way. Smart contracts are probably a in many cases a misnomer because it leads people to kind of assuming the wrong things. These are really operating systems. They're operating systems that can enable software, and that software could be to implement anything from payment networks or IP management rights or ride-sharing programs or whatever the case might be. So you just think about operating systems in the context of like your iOS operating system on your iPhone, where any app developer can build anything they want on top of iPhone operating systems, right? So this is what we mean when we're talking about kind of smart contracting systems. So we don't look at AI as a payment system, but what's unique in this context, the decentralization model, is that when I build something on Apple, on iOS, I have to pay a hosting fee. I have to pay Apple for the right to build on iOS software. So there's a payment mechanism in the back end that's happening that, one, allows them to take 30% of my revenues that go through that platform, but also to host that application, I'm paying for somebody to host a web server. Oftentimes it's Amazon through Amazon Web Services or Google or these types of centralized companies that are essentially taking payment for the management of this back-end software. What we replace in the context of decentralization is the reliance on these intermediaries. And often we don't think of these companies as centralized intermediaries in the same way we would think of banks. But increasingly, this is becoming more and more the case, where across the world and across industries, Google is probably becoming the biggest competitor that nobody thought would be their competitor, right? And Amazon is becoming the biggest competitor that people would never thought would be their competitor. And so decentralization to us is going back to kind of the root intents of designing the internet, creating a peer-to-peer environment where people could trade information and communicate with each other. And over the course of the last 20, 30, 40 years, we realized that there were more efficient ways of doing that essentially embedded into the internet's infrastructure centralized actors that controlled every on-ramp and every off-ramp of that ecosystem, where you can't message somebody without going through a Facebook service, a Google service, an Amazon service, or something of the likes. So probably 100% of the transactions that you interact with online are going through probably something like 5 companies' infrastructure, and they're all capturing value off that infrastructure. And generally, we've been okay with that trade-off as society. We've said, you know what, they're giving us enough that we're okay with the exchange. In many cases, we haven't even realized that we were part of an exchange. We thought we were the customer. We thought we were the consumer of the technology. We've, in fact, more recently become aware that we're not the customer. We're the product of the technology, because they are now aggregating our data and selling it to advertisers, and they're aggregating our personal profile information and selling it to election pollsters, and whatever the case might be. We've become the product of the internet, not the consumer of the internet. And I think that's now, especially over the last couple of weeks, we've seen a lot around Facebook and privacy policies. And I think 2 weeks ago there was a massive hearing of the European Parliament where Mark Zuckerberg spoke, and Tim Cook at Apple spoke, and Jeff Bezos spoke, and all of these things talking about the roles of these companies to be ethical in their treatment of data. But this kind of raises a really massive concern that we exist online, we interact online, we cross borders every single day online, so national jurisdictions don't matter anymore, and we're just trusting that Google's looking out for our best interest on a constant basis. And either maliciously or not, there's going to come a day where that model falls apart, where that model is hacked, or that model is taken over by some sort of authoritarian regime. If you operate in China, you're not using Google, you're using Baidu, and you just have to trust that the Chinese government has your best interests in mind when you're interacting with these services. So decentralization is important because of that. So we're saying, if we go back to the root intents of the internet, and you'll hear more and more, there's a man called Tim Berners-Lee who speaks a lot about this. Tim Berners-Lee was the kind of credited as the inventor of the World Wide Web. Yeah. And he's saying, hey, the internet became perverted. It was not intended to become what it became. And now that it's becoming such a large part of our lives, we're saying there may be a chance to use this technology as an opportunity to re-architect that.
Okay, on that point, so Fatima, we've talked a lot about intermediaries and this question of trust. But it turns out that, as you said, Canadians trust their banks. And by and large, they probably should. And so really, I look at this new, brave new world that we're going into. And on one hand, you can argue that many of the functions of a bank, acting as the trusted intermediary in transactions, could potentially be disrupted by this. On the other hand, with trust eroding in so many institutions, big technology companies, governments, and other organizations, there's an opportunity as well, right? As someone who is a custodian of trust and of data and of individual privacy in a lot of different ways. So sort of a big way of saying, can you address those questions in the context of blockchain, opportunity or threat for what your business is?
I think the biggest change for us is to start realizing to what Matt said is we are custodians of data and people want access to that data, and can we do it in a safe and secure way? And so the past few years, all the Canadian banks together with a company called SecureKey and in consultation with a whole bunch of public sector players as well, we've been creating a digital identity solution for Canada. And we do have a role to play in ensuring that data such as personal identifiable data is sent in a way where really fraudsters are not going to be able to hack into a honeypot and just take it from a central system, which happens today. It is on blockchain, will be live sometime in January, so we have roles to play in that spectrum, and digital identity is just the first step. There's so much more to be done when it comes to ensuring that data is not just secured, but also sent in a way where it makes sense, and actually where you, as a Canadian, as a citizen, you are given control of your data. So you know what you're sending and who you're sending it to and what it is going to be used for. And we don't have that today, and that's quite scary.
So that example that you gave is not just an example of people trusting banks, it's of banks sort of trusting the processes of other banks, right? The idea is that if you have an account open with one bank, you don't need to necessarily share all that information with the next bank, you just have to show the proof. You have to show the attestation that that bank did all the work. And that would be a way to cut down on, the cost of onboarding a customer, of doing KYC and AML and things like that, right?
Exactly.
That's the idea. And then on the question of, decentralization more generally, what are the thoughts on that? I mean, is this a way to cut cost? Is it something that isn't going to have a big impact, or is it something that poses an existential threat to aspects of the business?
I don't think it's a threat. I think it's the solution. And to your point, it will cost a lot of, not just cost, but it will create efficiencies, and we'll be able to focus on other things. And so slowly but surely, we are breaking that down and figuring out where those value chains are. Anna spoke about contracts. So when we think about mortgage contracts and everything else, there is a huge use case that blockchain can help solve there. When it comes to securities trading, we have our capital markets team very focused on how do we actually drive those efficiencies. Overall, I think it will change the banking system. It's not going to be what it is today. It's going to be more transparent, and it'll be more efficient. It's going to take us a while, though. It's nothing we're going to be able to do in a year or two. When I think about how long it took us to adopt cloud computing, it was over 10 years before we actually have a model where we're using it effectively. I think blockchain is going to take 20 years to actually transform within the financial industry, especially where we have to get over legacy systems.
Okay, well, on that note, I'm going to open it up to the floor for questions. I'm sure everybody's dying to participate in this discussion.
And we have time for one question.
We have time for two questions. Two questions. Come on. Yeah, two questions.
Thank you. I would imagine everybody here is interested in blockchain by virtue of them being here, but probably very few are dabbling in it or make regular use of it. How would you recommend that people here dip their baby toe into this blockchain world to gain experience in it?
I mean, from a consumer perspective, there's not a lot out there that is kind of in ready form for you to use, other than potentially, holding and buying some cryptocurrencies, which I think, unfortunately, has become most people's expectation of the consumer experience, is just buying these things as assets to be held in a portfolio. I think probably most importantly from our perspective would just be to spend more time reading on the topic of, we call it Web 3.0, this idea that we need to go through a massive re-architecting of the internet and why that is. And these examples I was giving around the role that Facebook and Google and others play in our lives. But very simply put, if you wanted to just start experiencing on a consumer layer, there's some easy to download mobile applications that allow you to kind of like interact with cryptocurrencies. One local one based here in Toronto is called Jax. Not a bad place to start. JAXX as a interesting mobile app that you might find fun to play with.
Yeah, Matt mentioned getting educated and reading, and of course, there's one book in particular I think you should strongly consider. You're getting a free copy, but Christmas is right around the corner, and I'm sure your children and cousins and Others, no. I agree with Matt. I think also, personal use is a precondition to understanding something. So it's not investment advice. I'm not saying, go out and buy a lot of cryptocurrencies. But it is good to download a cryptocurrency wallet, buy some Bitcoin, send it to someone who has an address and get a feel for it. It's actually quite a remarkable thing, regardless of where someone is in the world or regardless of the dollar amount. You can move value between people in a matter of seconds or minutes when it would take days through the conventional system. And I actually find that initial experience to be quite, illuminating. So next question. What's that? Gentleman in the front here, he's got a question.
Back.
Okay, one at the back first.
Oh.
Flip for it. Well, I like to describe it as a digital medium for value in the same way that the internet was a digital medium for information. So it's a way to move assets online peer-to-peer.
And maybe just a perspective, changing your question, what's blockchain or what impact might blockchain have? I think, Fatima mentioned the time horizon of 20 years for financial institutions to kind of wrap their head around this in a meaningful way. I'd challenge you to think about the companies that didn't exist 20 years ago that are now a very, very significant part of your lives because of the internet. And just imagine, open-ended, what the future companies might look like 20 years from now that might replace the types of companies that you use today in your day-to-day lives in a way that you might not expect. Amazon came out as a bookstore. It would have been a tough sell to convince people that that bookstore would become the largest company in the world. But 20 years later, it's not all that far-fetched. So I think that's just a perspective.
Yeah, and think about that too in the context of your own portfolio. If this was 1993, you'd have an equity analyst calling you and telling you, I've got a great stock. It's called Barnes & Noble. I got another one. It's called Kodak. And I got this third one. It's called Nortel. You got to own all these three stocks. And you may have done well for a few years, but it wouldn't have been a good trade long term. So, think about the future in the context of the present as well. Okay. Well, thank you everyone for joining us, and thanks to our expert panel here as well. Do you want us to stay?
Thank you. I'm pleased to welcome Richard Carlton, CEO of the Canadian Securities Exchange, to the podium to give thanks to today's panel. And thank you for being a sponsor today as well, Richard.
Thank you very much, Kent. And it is indeed a pleasure for the Canadian Securities Exchange to sponsor this event this afternoon. And in particular, I would like to thank Alex, Matt, Fatima, and Anna for their insightful remarks on the coming blockchain revolution. Just speaking strictly about my little part of the world, the plumbing behind the securities industry would be entirely recognizable to somebody working in some of these buildings that are still standing in the 19th century. It really would. The technology that powers those processes right now was actually built in the 1970s and is in assembler and Fortran and COBOL code. And Fatima and her colleagues in the Canadian banking world have been trying desperately for the last 2 generations to replace it. It really looks like blockchain is the answer to all of our prayers in this space. And really what excites me more than anything else is the creativity that's going to be unleashed when we are able to reduce the costs and the friction that we currently experience in this space. New securities are going to be invented, new ways of raising capital for entrepreneurs. And not just the new economy, but some of our friends from the mining industry that I see here today are going to be able to use new streaming royalty contracts, for example, to market their, the product of the mines to a broad public audience as opposed to a small group of really, really rich private equity guys who drive a very, very hard bargain. I think you know what I'm talking about, don't you? In any event, I could go on for hours about this, and we're at the end of our time. But again, thank you very much for joining us again, and thanks to the panelists. And by the way, there's a party in Megan's office at 3 o'clock this afternoon. She was the winner of the bottle of wine. Feel free to drop by. We're on the 9th floor at 220 Bay Street. Thank you very much.
Okay, thank you very much, everyone, for coming today. We have our next events coming up next week. We have Sven Dickinson at U of T on Monday speaking about AI. And we have a panel on pharmacare on November 28th. And we have Andrea Horvath on November 29th. So there's lots of events on our website. Thanks for coming today. We really appreciate you coming. And we're doing a book signing with Alex and Dawn. We're at the very back, so you can bring your books back there and they'll sign it up for you. So thank you guys for coming, and meeting adjourned.